Okay, this is chapter 11. Chapter 11 IGCSE accounting is other payable and other receivable. Before we see the chapter, let's look at what is the meaning of other payable. Mainly other payable, we have two other payable. One is accrued expenses and prepaid income. Accrued expenses and prepaid income we will call other payables. First, what is accrued expenses? Accrued expenses, the meaning of accrued expenses is the expenses that we haven't paid. We're supposed to pay, but we haven't paid. That's accrued expenses. Prepaid income. What's the prepaid income? The income that we receive in advance. The income that we receive in advance, we call that prepaid income. And remember, other payable, which is accrued expenses and prepaid income, both are our current liability. Both our current liability. So CL, current liability. And next one is other receivable. Other receivable also got to, what is other receivable? Prepaid expenses and accrued income. Accrued income, it's your other receivable. Okay, what is prepaid expenses? The expenses that we pay in advance. The expenses that we pay in advance for next month, and expenses we paid in during this month. What is accrued income? The income that we supposed to receive. The income that we supposed to receive, but we haven't received. The income that we supposed to receive, but we haven't received, we call that accrued income. Both of these are other receivable. Other receivable, we have prepaid expenses and accrued income. Both of these we will record under the current asset. We'll record as a current asset. Okay, let's look at the topic. It is necessary to make few adjustments. Okay, it is necessary to make few adjustments on trial balance. On trial balance. Okay. The trial balance amount before we prepare the final account. Okay, let's go to the trial balance. What is the trial balance amount? What's the trial balance amounts? All the amount that all the income and expenses, I'm talking about income and expenses, all the income and expenses that we already paid or received. Okay, the amount or the income or the expenses that we already paid or received normally will be recorded in the trial balance. Okay, the income and expenses that we already paid or received will be recorded under inside trial balance. Okay, before we prepare the final account here is income statement and statement of financial position. Okay, before we prepare the income statement and statement of financial position, we need to do some adjustments on the trial balance. Okay, the trial balance amount. Okay, example. Let's talk about rent. Let's talk about rent. Let's talk about rent. Rent monthly. Your monthly rental is 100. On the year 2019, we rent the particular office January to December. We rent the office January until December. And January until December, we have paid $1,000. Okay, we have paid $1,000. This $100 per month. Okay, but our rental is from January to December. For this 1 month, we have paid 1,000. So this 1,000 will be recorded in the trial balance. Will be recorded in the trial balance. We recorded in the trial balance. But now we want to do the income statement. In the income statement, we need to write the expenses. In the income statement, we will write the expenses. So how much the expenses that we're going to write inside the income statement? Is this the expenses that we paid, which is 1,000 from trial balance? Or if you see the calculation from January to December, it's 12 months. Okay. So your yearly rental will be 1,200. Okay. 1 month, 100 means we rent for 12 months. So your yearly rental will be 1,200. So in a trial balance, they will write only 1,000 because we have paid only 1,000. After that, we need to prepare the income statement. In an income statement, we supposed to write 1,000 or the 1,000 that we already paid, or the 1,200 that we supposed to pay. So which one will go to the income statement? In an income statement, we supposed to write how much for the year, how much for the year, regardless we paid or not, which is 1,200. So remember this, we simply cannot take all the income and expenses from the trial balance. The trial balance will be recorded all the paid expenses or received income. They will write all the paid expenses or received income. The income that we receive or the expenses that we already paid. But in an income statement, we supposed to write how much for the year. For the year. So that's why if you see the income statement title, the name. Okay, income statement for the year ended, and then we write the date, right? So in an income statement, we supposed to write how much for the year, regardless if we have paid or not. No. So here, the story here is 1,000 we paid will be recorded in the trial balance. And then what we need to do to get 1,200. So now we need to plus another 200. And what is this 200? The 200 is we supposed to pay, but we haven't paid because we already rent. We already rent out the rent the office. Okay, rent the office. So we already use the office for our office purpose or any purpose. But now we supposed to pay 1,200 for 1 year, but we only paid 1,200. 1,000. This 1,000 need to plus with 200. What is the 200? The 200 is my accrued. Okay, the 200 is actually accrued. So 1,000, that one that we paid, plus with the 200 accrued that we supposed to pay for this year, but we haven't paid for this year, we will get how much income for this year, which is 1,200. This 1,200 will be recorded inside income statement for the year ended 2019. We record inside year ended 2019. Okay, roughly you get the point. The accrued, what is accrued? So we continue with our lesson. Only item relating to the particular time, only item relating to the particular time period should be included in the statement. Okay, the timing, actual receipt and payment is not relevant. So we don't care about the money received or not. If it's the expenses for this year, we record for this year. Okay, let me go back to this example. I changed a little bit. From January to December, the company have paid 1,500. Let's say the company got a lot of money. So what they do is they paid 1,500. They paid 1,500. But the monthly rental still same. Monthly rental is 100. Their rental for January until December. The rent for January until December. So they're supposed to pay 1,200, but they have extra money, so they pay extra 1,000. They pay the 1,500. So this 1,500 will be recorded in the trial balance. And now you're supposed to transfer to the income statement 1,500 or 1,200, which is for the 12 months. Which one will transfer to the income statement? the 1,200, still the same expenses. Don't care how much you pay. Don't care how much you pay. Okay, we will record 1,200, which is the expenses for that particular year. So now, to get the 1,500 from trial balance, we need to prepare the income statement. So in the trial balance, 1,500. Now you need to plus or minus. Minus how much? 300. And why you minus? Because this 300 is your prepaid. The 300 is your prepaid. Prepaid means the expenses that we already paid, but not for this year. It's for next year. So since it's not for this year, we minus the 300. So remember, if it is accrued, on closing means end of the year, accrued end of the year, we will plus. And prepaid closing here means the end of the year, we will minus. Remember this is very important point. Accrued closing, we plus. Prepaid opening, we minus. Accrued closing, we plus. Why we plus? Because that particular expenses for this year, the particular expenses is for this year. The particular expenses is for this year, but haven't record. Why we haven't record? Because we haven't pay. Since we haven't pay, so we didn't record. Since we haven't pay, so we haven't record in a trial balance. So now, even though we didn't pay the expenses, that particular amount is our expenses for this year. So we plus into what? Plus into the amount that we already paid. For the example just now, I go back to my previous example. I paid 1,000. I didn't pay my accrued. Accrued is 200. So how much is my expenses for this year? 1,000 I paid, 200 I supposed to pay, but I haven't paid. Okay. So how much is my total expenses for this year? 1,200. I plus this 200, accrued 200, because this particular accrued 200 for this year's expenses, which is haven't paid. My record in the trial balance shows only 1,000 expenses. So I need to plus another 200 before I prepare my income statement, which is the final account. Okay, we continue. Prepaid closing. Prepaid closing, you need to minus. Why we need to minus? What is prepaid? What is prepaid closing? Prepaid closing is expenses for next year which had been paid. We use a simple one now. Expenses for next year which had paid. We already paid this year. The expenses for next year which had paid this year. We already paid this year. So this particular prepaid closing is not for this year's expenses. So we will minus. So let me use one example here. Just now, the paid is 1,500. And how much prepaid? Prepaid means you overpaid 300. So my expenses for this year is still 1,200. This 300, I will minus from this 1,500. Why I minus from 1,500? Because that particular 1,000 inside the 1,500, 300 is not for this year. Since it's not for this year, we will minus from this year's payment, then we will get the actual expenses for this year. Okay, we get roughly the idea of the accrued and prepaid. Okay, just one thing, just remember this: whatever that you record in the income statement, whatever that any income or expenses that you record in the income statement must be income or expenses for this year only. This year only. Okay, we go back to our notes. So an income statement is prepared in a definite period of time. Okay, example is for 1 year. Okay, 1 year, 1st January. It's for 1 year, maybe 1st January 2019 to 31st December 2019. Okay, this is 1 year. Or it can be 1st March. 1st March 2019 to 30th April 2020. Okay, so the 12 months can start any month. Okay, let's say another example, maybe they start on 1st September 2019 to 31st August 2020. So your 1 year can be any can start any month. Okay, and some companies, they do 6 months also. You can do for 6 months also. It depends on the question. Okay, but most of the questions that we see is for 1 year. It's 1 year, so we do accounts for 1 year. Okay, it is a practical application of matching principle. What is the matching principle? Matching principle is expenses for this year, income for this year will match against expenses for this year. I repeat, matching principle is income for this year will match against expenses for this year. So all the income and expenses that you record in the income statement must be only for this year. If you overpaid, we will take out how much that you overpaid. If you underpaid, we will plus how much that underpaid. So we will get how much income or expenses for that particular year. Okay, I give you example for expenses. The same concept will apply for the income also. So we continue to these notes. Adjust the item within the income statement for the amount prepaid. What is prepaid? Prepaid means overpaid. Prepaid means overpaid. Or accrued. Accrued means you're supposed to pay, but you haven't paid. We call that not paid lah. Okay, we're supposed to pay, but you haven't paid. Okay, that's accrued. This means that the profit or loss be shown at more accurate figure. So the profit and loss that we get is, if we just take how much that you paid minus with how much you how much you receive minus with how much that you paid, the profit that you get, is it for the particular year? No. Why no? Because the income that we receive, we haven't checked for the prepaid and accrued. Sometimes we receive in advance or we haven't received. Same goes for expenses. Sometimes we pay extra, prepaid, or we haven't paid. We're supposed to pay, but we didn't pay, accrued. Okay, all these things we need to adjust before we prepare the income statement. From the trial balance that we paid and received, will be adjust for prepaid, which is overpaid, and accrued for not paid, haven't paid. And it's allowed for meaningful comparison for the financial statement from year to year. So every year they will fix their expenses and income. So we can compare the financial statement for this year and next year. Okay, under the topic, other receivable and other payable, chapter 11, the first part, we will learn about accrued and prepaid expenses. Accrued and prepaid expenses. Okay, again, what's accrued? the expenses that we supposed to pay, but we haven't paid. What's prepaid? The expenses that we pay overpaid, that we pay for next year, but we paid this year. For next year, we paid this year. So before we continue, we try to do this table here. Okay, let me explain. The trial balance. The trial balance means the amount in the trial balance. We need to read the transaction here. We need to read the transaction here and try to fill in the figures that represent all this. Okay, trial balance, we will write how much that you paid or you received. Can be paid or received. Income statement, how much for the year, regardless we paid or we received, don't care about that. How much for that particular year. And in a statement of financial position, normally we will write accrued expenses and prepaid expenses. Accrued income or expenses, or prepaid income or expenses will write in the statement of financial position. Okay, first one. We do question number 1. Rent paid is 2,000. Rent paid is 2,000. So in your trial balance for this rent, how much they will record here? How much they record here? They will record here 2,000. Because we paid 2,000, so trial balance will represent 2,000 under the rent. Again, unpaid. Unpaid means we haven't paid. Unpaid rent for the year is 100. Unpaid rent for the year is 100. So how much we will record in the income statement? Is it 2,000 that we paid, or 100 that we haven't paid, or 2,100? Which one we record in the income statement? How much is rent for this year? Rent for this year is 2,100. Rent for this year is 2,100. The 2,000 that we already pay, plus with the one that we haven't paid, which is accrued. So this here, in this story here, we have accrued expenses. Accrued expenses is 100. So in a statement of financial position, we will write accrued rent, accrued expenses or accrued rental, which is 100. But now I need to know this accrued expenses is your asset or liability. How to decide asset or liability? If it is asset, that guy owe me. If someone owe me, that one is my asset. If I owe someone, that one is my liability. So this one, I supposed to pay 100, but I haven't paid 100, the rental. So I owe that guy. If I owe that guy, it will be my liability. And normally, accrued and prepaid will become your current liability. Current liability. Under the current liability, accrued rental 100. Okay, we try question number 2. Commission paid is 1,800. So in a trial balance, I'll write 1,800. How much that I pay? It will be recorded in the trial balance. And I realize there's a prepaid for the year is 200. Prepaid for the year. Prepaid for the year means that particular 200 not for this year. If not for this year, I will plus or minus. I will minus. So how much expenses for this year? 1,600. I paid 1,800 during this year. Commission paid is 1,800. Out of the 1,800, 200 is prepaid. What is the meaning of the prepaid? The expenses that we paid during this year, it's for next year. Since it's for next year, this income statement for this year's income statement, okay, this year's income statement, we cannot include the 200 because it's not for this year. Only for this year only, we'll record here. So we will write here 1,600 as our expenses for this year. And this is my prepaid. This prepaid will be recorded in the statement of financial position, prepaid 200. But now we need to decide it is asset or liability. Prepaid means you pay extra. If you pay extra to that guy, you owe that guy or that guy owe me. That guy owe me now. Okay, that guy owe me. If that guy owe me, it's my current asset. Understand now? Continue. Next one. Salary paid 1,200. So your paid will be 1,200. Then we owe to the workers 100. We owe the workers mean we haven't paid to the workers 100, but the worker already worked for us already. Okay. So how much is the expenses salary for this year? 1,200 or 1,100 or 1,300? This is accrued. Accrued means we're supposed to pay, but we haven't paid. So we plus 1,300. We paid 1,200, correct? But the 100 we're supposed to pay, but we haven't paid. So we'll plus into the income statement. We show in the income statement as a 1,300. And this one is we call accrued. Why I say accrued? Because we're supposed to pay, but we haven't paid. How much? 100. Accrued expenses, I owe the workers. If I owe the workers, it's my current liability. So CL, current liability. Okay, let's continue next one. Insurance paid for 1 year. Insurance paid for 1 year on 1st March 2019 is 2,400. Okay, I pay the insurance for 1 year on the 1st March 2019. How much I pay? I pay 2,400. Okay, stop there and answer me. If you pay the insurance 1st March 2019 and your insurance will be valid until what date? Your insurance, you pay for 1 year, right? If you pay for 1 year means your insurance will valid until what date? For 1 year means March, April, May, June, July, August, September, October, November, December, January, February. So it will be 28 or 29, 28 or 29, February 2020. So this is my 1 year. I've paid my insurance 1st March 2019 until 28 or 29 February 2020. Okay, this is our story. We continue. For the year, for the accounting year ended 31st December 2019. This is the problem. We are doing our accounting year. What is the accounting year? We do the accounts until what date? Our accounting year will be end on 31st December 2019. We pay this 2,400 for 1 year, start 1st March 2019 until 28 or 29 February 2020. We paid until the 2020 February. But our accounting year finished on 31st December 2019. It means we overpaid or underpaid? We overpaid. Overpaid how many months? Start from 31st December. So don't calculate 31st December, January, February. 2 months. We overpaid for two months. Okay. That's a January and February 2019. Okay. That January, February 2019, we didn't pay any insurance. Okay, because your insurance start on 1st March 2019 only. Okay, to the 2019 January, February, we didn't pay any insurance. Maybe that particular can be any reason. Can be any reason that we didn't take the insurance for January, February 2019. We start our insurance start on 1st March 2019, and we will close our account on 31st December. But we have paid until the next year February. So 2 months extra. Before we continue, we need to calculate how much is the extra. So how to calculate how much is the extra? First, how many months? Just now we say 2 months, January and February 2020. So you take 2,400 that you pay. This 2,400 you pay for how many months? This 2,400 you pay for 1 year. So this 2,400 divide 12. Why I divide with 12? Because you paid for 1 year. If you pay for 6 months, I will divide by 6. Since we pay for 1 year, so I divide by 12 because 1 year is 12 months. Times with how many months extra? 2 months extra. So if we take a calculator, we calculate 2,400 divide 12 times 2. I get 400. So this 400 is prepaid. So we try to fill in how much we paid. We paid 2,400. Out of 2,400, how much is not for this year? This answer here just now, 400. How much is not for this year? 400 not for this year. So how much for this year? I want income statement. Income statement, how much for this year? 2,000 for this year. And then the balance 400 is my prepaid. Prepaid 400. Prepaid means I overpaid. If I overpaid means it's my, I owe that guy or that guy owe me. That guy owe me. If that guy owe me, it's my current asset. Current asset prepaid by 400. Okay, next one. Wages 300 per month. 1 month per month means 1 month. 1 month wages we pay 300. Wages for the year is 3,600. Wages paid. Okay, we paid the wages for the year is 3,600. So wages paid 3,600. So how much for this year? How much for this year? How to calculate how much for this year? We take 300 times with 12. 300 times with 12, we get 3,600. We get 3,600. We're supposed to pay 3,600 and then we paid 3,600. So this particular question, we don't have any accrued or prepaid. If you don't have any accrued or prepaid, we no need to write in the statement and financial position. Okay, before we continue with the example, we need to recall some other things. What are the things? We need to decide this particular thing will be debit or credit. This particular thing will be debit or credit. Very important. If you don't know debit credit, we cannot do the accounts. Okay, first one. Expenses paid. Whenever you pay expenses, your expenses will increase. Whenever expenses increase, we record in the debit side. Expenses paid will record in the debit side. If you got any question on this, you comment below there, then I will answer for this. Income received. Income received, your income will be increased, so it will be credit side. Okay, I believe this is chapter 11. You're supposed to know the debit credit. If you still got some problem in your debit and credit, you just comment below. I will explain in detail. And the asset balance BD will be in a debit side. Asset balance CD means closing balance, will be in a credit side. Liability balance BD mean opening up. Okay, liability BD will be in a credit side. Liability CD will be debit side. Okay, and if you want to add the expenses, expenses increase, so debit. And If you want to minus the expenses, expenses minus means credit. If you want to add the income, you want to add the income, income will be credit. If you want to minus the income, income we need to record in the debit. So try to write this in anywhere in a paper, so it will be helpful. Okay, write in a paper and keep that. So along we do this question, all the question in this chapter, we will recall this. We will use this particular formula. Remember this: expenses paid, debit, income received is credit, and rest of all this. Okay. And another thing that you need to know before we start this topic is these steps. Okay, the steps also you write anywhere in a paper. We will use these steps. Step number 1, if that particular question give you some balance, we will record the balance. We will record the balance, balance BD. If the question give you any opening balance, we'll record. Debit side or credit side, it depends on asset or liability. Okay, just now, asset, right? Asset BD will be debit side. Liability BD will be credit side. We will follow this. If that particular thing is asset, we record in the debit side. If the particular balance BD is a liability, we record in the credit side. Next one. And then we record money paid or money received. If you paid, we will record in the debit side, in a expenses account. In the expenses account, we will record in the debit side whenever you pay. And whenever we receive the income, we record in the credit side in the income account. Okay, now we are talking about income and expenses account. We are not talking about the bank. Okay. Next one, step number 3, we record the balance CD. If you got any balance CD, we record. If it is asset, we record in the credit side. If it is asset, we record in the credit side. Just be clear, balance BD asset will be debit. Balance CD asset will be credit. Okay. Liability balance CD will be debit. Step number 3. And step number 4, we will balance up the income or expenses account, and then we will calculate how much. We will calculate how much income or expenses for that particular year. And then we will label that as our income statement. Income or expenses for that particular year, we will label that as an income statement.